This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. and European oil companies reported weaker first-quarter results on Friday due to a sharp drop in natural gas prices compared with a year ago. Results at oil and gas firms are still retreating from record levels in 2022 that were boosted by a surge in demand after the COVID-19 pandemic and then when prices spiked after Russia invaded Ukraine. In the U.S., ExxonMobil missed Wall Street earnings targets on fuel derivatives and Chevron beat tempered expectations with better-than-expected U.S. oil production.
U.S. energy firms this week cut 5 oil rigs, the biggest weekly drop since November, energy services firm Baker Hughes said in its closely followed report on Friday. Meanwhile, the oil and gas rig count, an early indicator of future output, fell by 6 to 613 in the week to April 26, the lowest since February 2022. Baker Hughes said that puts the total rig count down 142 rigs, or 18.8%, below this time last year. The number of oil rigs fell by 5 to 506 this week, while gas rigs fell by 1 to 105, their lowest since December 2021.
Moving on to the top news in the energy sector.
The United Arab Emirates will tender shortly for the construction of a new nuclear power plant that would double the number of the small Gulf states' nuclear reactors, 3 sources familiar with the matter said. The UAE, a U.S. security partner, became the first Arab state to operate a nuclear power plant when in 2021 it opened in the South Korean-built Barakah facility in Abu Dhabi. The UAE plans to seek bids this year, potentially within the next few months, to build 4 new reactors, the sources with direct knowledge of the matter said, requesting anonymity to discuss details that are still private.
The end of oil is not in sight, OPEC's top officials said, as the pace of energy demand growth means that alternatives cannot replace it at the needed scale, and the focus should be on cutting emissions, not oil use. In an op-ed article in the Middle East Economic Survey, MEES, published on Friday, OPEC Secretary General Haytham Al-Ghais wrote there is a worrying trend of narratives that use terms like the end of oil, which have the potential to foster energy policies that stoke energy chaos. What if investments in supply fall as a result, but demand for oil keeps increasing, as we are seeing today? Al-Ghais wrote in the MEES article which OPEC shared on X. Next, we have the top news in metal markets. Copper prices in London hit a 2-year high and tested a major level of $10,000 a metric ton on Friday after BHP Group's bid for Anglo American put supply concerns in focus and intensified fund buying. 3-month copper on the London Metal Exchange was up 0.9% to $9,950.50 a ton by 16:29 GMT after peaking at $10,033.50 for its highest since April 2022. Shanghai prices hit a record high. Copper, used in power and construction, attracted additional attention from investors after BHP's $39 billion takeover proposal for Anglo American, which the London-listed miner rejected on Friday.
Gold prices held gains on Friday after data showed that U.S. inflation rose in line with expectations, but the safe haven metal was on track for a weekly fall as some geopolitical risk premiums eased. Spot gold was 0.3% higher at $2,338.65 per ounce by 1:47 p.m. Eastern Time. However, prices marked their worst week since December after a major escalation in the Middle East crisis was averted. U.S. gold futures settled 0.2% higher at $2,347.20. The U.S. Personal Consumption Expenditures Price Index increased 0.3% last month, in line with forecasts, a development that is unlikely to change expectations that the Federal Reserve will hold off cutting interest rates until September.
We will now look at the top news in the agricultural sector.
Euronext wheat extended a rally on Friday to reach its highest since December as traders grappled with weather charts suggesting little rain relief for a parched crop belt in top exporter Russia. September wheat, the most active position on Paris-based Euronext, was 1.3% up at €234.50, $250.28, a metric ton by 15:27 GMT, putting it up 9% this week. The contract earlier hit its highest since December 13 at €234.75. After consolidating in morning trade, Euronext resumed its rally in step with Chicago wheat as weather updates appeared to show southern Russia would stay mostly dry and warm in the week ahead.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.